Hey peeps, it's Danny here with another investing video. So basically we've turned into a big ball of Zim for interactive brokers. A lot more balanced, more in real estate and most of my other accounts, but here we're just a big shipping company mostly, which is, interesting. And so obviously Zim paid out its dividend. We've got $6,862 of dividends incoming, so that's pretty huge. Obviously, it dropped a little bit. The returns, mostly that's just the dividend being paid out. Um, you know, People who miss the dividend, they're going to pay a little bit less for the stock. So we kind of have the downside of, the stock being a little bit lower in price, but not having received the, nearly $7,000 in dividends. But that's just kind of, correct itself very shortly because that dividend is incoming. It's in the hamper. So to speak. And so, I mean, it's pretty solid. I like what we're seeing. I think you look at Zim, the price action, it got kind of hot. It was um, running a lot in the 19s. I think it very briefly touched 20, if I'm not mistaken. But obviously you're seeing we're sinking down. 18s, 17s level, maybe even testing the 16 level. Um, I'm not sure that the 16 level is so legitimate, um, because I think they just take the stock price and they just subtract the dividend out. We could see a pop back in the 17, but if we're in the 16 level, I still think that we're going to see some major price action on this, probably upward, mostly due to the index. The final slide shows the index, which so we had been in the 1300 range for the index for a while, which is profitable but pretty weak. And then with the news we popped to 1479, then 1586. These are still fairly moderate levels, but the most recent reading from May 30th comes in at 2072. I think 2000 is a very key level, in that in the 2000 level, you're going to start to see very, very big dividends. Like, if you're holding 2000 for an extended period of time, that's the sort of thing that can cause a $3 dividend or so, So that we're moving into the 2000 range, that is extremely bullish. It just depends how long we hold that. Now, I mean, there's a lot of the dynamics are changing very rapidly. I mean, apparently, Trump and China are maybe a little less friendly, but on the other hand, there's the courts having said that some of the actions Trump may be taking on tariffs may not be allowed, but some of them are allowed. The headlines tend to be very like, Trump is just being denied from doing tariffs. Well, no, certain tariffs he's being denied from doing based on certain laws. He's not allowed to do the emergency tariffs, but under other laws, many of the tariffs are still in place. And it's kind of funny. They're like, you read the headlines, it sounds very one way, but you look at the details. Actually, the amount of tariffs that are allowed are significantly more than the amount of tariffs which have been denied. So I would still say tariffs are very heavily in effect, because while there's a lot of headline shock and the headlines read a certain way, which sounds like Trump got denied from tariffs, it's actually more of his tariffs he's doing under non-emergency acts than under emergency acts. So, um, but even still, I think that any reprieve from the tariff for things that get reprieved, um, in the meantime of the fight, and everything, um, that's going to push a lot of shipping like now, because the shipping is a fairly low cost compared to the tariffs. So anything that might be exempt at this point, I think people are going to ship it yesterday, to avoid the tariff. So I think that's going to cause more price action upward. Obviously, like in 24, where we saw like $7 plus in dividends. The index, the low had been um, about 1,700. So our lows this year were much, much lower, and the high was 3,700. And it didn't spent about above the 2,000 line. Like, to me, it was from May to approximately September. May, June, July, August, about 6 months. So I mean, I'm not saying, I guess that it was probably about $7 in dividends for Zim last year, maybe closer to 8. I don't remember. I mean, obviously we're not looking at such a strong setup so far. We spent how much of the year, above 2,000? Well, it looks like we broke out of 2,000 in January. But the bigger thing is there's a big trail of, like 60 to 90 days. So a lot of what we were seeing last year, from September onward, is being carried in. But that also means, that we're not going to start seeing this stuff until third quarter. But I mean, from September onward was 2,700 to looks like 2,400 with a low of around 2,000. So, you know, hypothetically, we're still on track for a pretty good thing. Just depends how high we spike here off of this current turn. I think that full year, um, just my guess is very possible $5 in dividends, but maybe it'll be a little bit lower, but I would still be, I think, 3, 4 at minimum. But I could be wrong, but because I mean, look at the 74-cent dividend we had, 74 cents. That's with a 30% payout. What Zim does is they pay out 30%, and then at the end, if they're profitable full year, they kind of up it close to 50%. So that 74, you divide it by 3, times it by 2, you come to nearly 50 cents at the end of the year. So we still got 50 cents coming. So we've already pretty much 125-ish, obviously, but that depends on full year profit and them increasing the full year profit. But I think they definitely will, that trajectory. So, with going into another 2,000 setup, let's say, even if this next, even if third quarter comes in at like another 74 cents, that, yeah, I guess a similar look to the first quarter, throwing maybe 10 cents for the middle quarter, and then something for December. I think $3 minimum on the year seems pretty reasonable to me. So my sort of gut is $3 to $5 for the year. Hopefully closer to 5, but maybe if we get some really good price action, and it goes above the 3,000 range, maybe we could see 6 or more. I don't know. I mean, we spent too long, too low for like, $7, $8 to me, unless it really spikes. I mean, if it spikes to 3,500, 4,000, who knows? I mean, it could be just truly huge. But I don't know where we're going. But I like to be conservative, so conservatively, I'm estimating 3 to 5. Which 3,000, with my portfolio, or $3, how many shares do I got? 12,300 in this portfolio. I got about 1,350 total. But almost my other portfolios are more pretty heavy real estate. But this is kind of turned into the shipping portfolio. But $3, that's about 37,000 ish at $3 flat. So we'll see where it happens. But I'm optimistic. I'm liking what I'm seeing. Um, Obviously, the price action is a little bit weak on the actual shares. Um, so I do have to watch my margin a little bit. But I mean, I've got plenty of cash I could bring in from other places, or just maybe sell off some of the lesser holdings here. Doesn't because it's really not going to matter a whole lot. But we've still got quite a lot of liquidity here, so we're not in any real concern there. I mean, especially once the dividend hits, it'll look pretty nice, the liquidity. But yeah, I mean, obviously, the option cushion too is, if things are a little weaker for the next 2 years, kind of gives quite a lot, because basically, I'm my 16, 2027 calls, the cost basis is $39,549. So if it's weak and the share price is low, then that's basically $40,000 I collected for free at the end of that, because it'll expire worthless, and which is quite a lot, considering the scale of the portfolio. That's um, about a 40% return. It's pretty insane, actually. That's the nice thing is you get to a good price, and then you kind of lock it in with an option. I mean, and what I did, the 1616, it's more like a rental um, than than owning the stock almost. Because what I'm doing here is I'm collecting so much cash from it that the probability that it gets called is extremely high. So it's almost more like I'm getting $40,000 to rent my stock for 2 years, and then but I still get the dividends, So and then I'm happy with the price that I'm selling at, which is off the 1616, a 450 premium. That's close to $20.70 ish, which is pretty nice anyway. Pretty nice premium what I paid. So plus you get that cash up front, which is nice. So we got some other options in, so I'll just have to see the July 18 calls, 18, 16. So I mean, obviously it's nice because I collect the dividend, plus, there wouldn't be really any share appreciation off that, but I mean, obviously at 88 cents a piece, um, that's quite a lot of money anyway, for even with no appreciation for that short time. So pretty happy with where we're sitting and just see where it goes. But the movement's been good, so I'm very optimistic that this will be a nice looking portfolio for the next 2 years, and then figure out how to get the all the margin, that 112K margin loan paid off. Ideally, if we could pop $5 plus, that would be really nice, because then that would just kind of take half of the margin off, and then it would be really easy, as we go through, to figure out how to get below those numbers. But we'll just see where it goes. I'm not in a hurry. I want more important that I get it done good than to get it done fast. But the trajectory looks very, very optimistic and positive. So glad on that. All right. So next time, peeps.